Let's take a look at it. Let's roll here this morning, guys. Great trading day yesterday. Today's video is going to be about entering the liquidity sweep zones. It's going to be about placing your stop in the liquidity grab sweep zones. So everybody, top the morning to you. It's 8:45 in the morning, Eastern Standard Time. We're going to do our pre-market prep right after this video. I'm going to go over our targets today. I'm going to go over our entries. I'm going to go over our stops. And we're going to pre-plan what to do for the trading session. So let's get rolling here this morning. Today is going to be about entering the market at these zones. So first of all, the first chart here is our workspace, our trading space. This is our trading plan for the day. So this is our entry chart. We had a big liquidity grab sweep zone that just hit right here at 8:30 this morning. Hey, Russ, good morning. At 8:30 this morning, went right to our zone. This is our first zone. This one did not hit our zone. Our zone, our proprietary zones are right at these little slices. So our liquidity grab sweep zone just hit. It got inside of it. I'm going to show you how to an entry technique and where to place stops on this sweep zone. So this sweep zone was at 74 and a quarter at 8:30. Right now, it's only 8:50. 20 minutes later, we're at 8:51 low. So we had a potential sell at 74. We're at 8:51 low. How can we take advantage of this? How can we enter? Where can we place our stop? Let's go through the methodology first of all. I'm not going to make this video too long so we get our mind right and see what's going on. So get ready for the pre-market, our trading plan for this morning. So the upper left-hand chart, let's go through the process of trading daily in any futures market, any stock, any crypto, any currency market. These exact setups work in all markets right across the board. The first thing you want to do when you first log in, let's take a look at the upper left-hand chart. What is our trading bias for the day? When I was a guest speaker at Las Vegas Trade Show, over 6,000 traders around the world attended. And the one question I asked, how many traders make money counter trend trading? Nobody raised their hand. You can't make money going against the overall trend of the overall push. But the hardest part about trading is trend trading is easy. Chop trading is hard. So how can we decipher to be on the right side of the market? Good morning, Steve. What's the best strategy for us to get on the right side of the market so we can be with the smart money, the professional traders, and not be on the amateur side or the retail side of trading? What I've come up with is to keep on the right side of liquidity, because the market's always trying to grab liquidity. The market's very, very orderly. It's always trying to find the next fair value level and is trying to always grab liquidity from the amateur, the novice, the traders that are counter trend trading the market, to grab that liquidity to push it in another direction. So you got these institutional traders always trying to take what's called stop outs. They're trying to grab stops. That's essentially what liquidity trading is. Hey, good morning, Thomas. Liquidity trading is grabbing stops to add contracts for these big institutional players, these algorithms, the Goldman Sachs Delta programs, etc. So they want to add these contracts in instead of just going at the market with 1,000 contracts or 500 contracts or 200 contracts. They want to pull the market back against the overall push that's going on currently, and they want to grab liquidity. That's what this software does. So the first thing we want to do is we need to have a bias. I made things very, very simple for everybody now. If you look at the bottom oscillator, this bottom oscillator will tell us if we need to be buying liquidity grab sweeps or we need to be selling liquidity grab sweeps. In other words, are we going to be selling my proprietary sell zones where these players like to pull the market back to and reverse it like it just did on this big push we got going on now, or do they want to buy liquidity grab sweeps? So this oscillator right here below, if we are below our white line, and I showed all members how to set this up on their own charts. If you do need to see how to, if you do need to find out how to set this up, please email me. I know a lot of members don't log into the ES. You trade other markets. So email me and I'll be glad to help you out setting this on your own charts. Gerald has the template set up to help you also. So you have a template where you can just go in there and plug and play. Okay. So what we want to do is this: how to spot daily buyer sell zone bias for the session. The first thing we're going to look at is a 50 MA above or below. Now we have a 30-minute chart. We have our 30-minute chart in the room. We have a simple 50 MA that tells us the bias. If we're above the 50, we're looking for long side setups in the buy zones. If we're below the 50, we're looking below it. But to make it a little simpler for you, I added this oscillator. And this oscillator makes things quite simple, because without the oscillator is very simple. If I'm below my threshold right there, the white line, if my oscillator is below it, we're looking for shorts only. There's no buys. This is absolutely zero buys. Yesterday, the entire trading session was nothing but shorts. The day before, the entire trading session was nothing but buys. 3 days prior to that in the week, it was nothing but shorts. This way, we stay on the right side of liquidity and we're playing with the smart money. We're going with the smart money. We're buying retracements with the smart money. We're not getting run over by the runaway train or trying to catch a falling knife with retail. So this is the first thing we look at. So I look at this, right? And yesterday was nothing but shorts. Where are we at in the position of the market right now? So it's 7 o'clock this morning, 7 a.m. Eastern Standard Time. My oscillator went below my threshold right there, my white line, at 7 o'clock this morning. So what are we doing? We're only taking shorts right now. Well, what happened this morning? Let's take a look at it. After 7 o'clock this morning, what did the market do? We're not taking longs. Here's 7 o'clock in the morning. We're not taking any longs. None. We wanted to get to liquidity. There's 7 o'clock this morning. We want to get into these sell zones. This is where they're grabbing liquidity. Not right here, this yellow trigger right here. This is a scalp trade of that sweep zone for shorts. Did it close one candle outside there? No, it did not. That means the integrity of the market is still down. And now we'll know by looking at this high right there if the integrity of the market short is over. In other words, we're not taking nothing but shorts today based upon our oscillator below the threshold level right now. And consequently, we are not going to be looking for any shorts if we get above this threshold. So right now, we're still looking for liquidity grab shorts. But how can we enter? How can we enter if we get inside of these zones? So when I first created these proprietary zones, is that what we did is we used what's called a pull-in technique. It's a yellow trigger entry where you get in and you have the market confirm, and your entry would be a trigger where it gets inside a nice little yellow trigger right there like that. 68 3/4 or 68 1/2 would be the fill, and your low went down to 51 so far. All right. The problem that with some traders is if they're trading the big contract would be larger stops, because this is a 35. This is a 1-1-135 on Urenco. So the issue would be that you would have to, the integrity of the zone is the stop level would be the integrity of the zone outside the zone. This is where that the market has to hold the zone to keep going lower. So that's the stop level would be something like that on the zone. So the zone is the ultimate tell if the market's going to stop, keep going down, or keep going up. So I found a little easier way. Not only did I find an easier way for you guys to find out the bias now, I mean, this is as simple as you can get. If I'm below the threshold, we're shorting all day yesterday. If my oscillator's above the threshold, we're buying liquidity grabs all day. If we're below the threshold here, we're shorting nothing but zones all day, right, for 3 days in a row. If we're buy for 3 days in a row, we're doing nothing but buy liquidity grab sweep. So I made it really, really simple to see this. So we set that up on our workspace. So that's fine and dandy, right? So now we got the bias down. We're on the right side of the market. So what we can do is that we can see where these zones are, because these zones are important then, because we know that these zones are where price likes to reverse. So before I get into the entry technique, as we get into this, I'm going to show you another entry technique and where to place stops. So let's look at yesterday's price action. We were shorting all day yesterday. So if you look at the shorts yesterday, look how many opportunities we had. Sell zone, sell zone, sell zone, reversal, 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 reversal. Came up right to the high of the sell zone. Did not close above it. Look how it held the threshold of the zone. Do you think that's just by luck and by chance that these zones are reversing price? Sell zone, sell zone, sell zone, sell zone, sell zone, sell zone, reversal, reversal, reversal. So what it does, it lets you know with my oscillator now when we need to pick on one side of the market. We're not taking long side setups inside of buy zones here because this is a buy zone, the green dashes, right? Why? We're not taking that buy zone there, and we're not taking the buy zone here where it reverses inside of my liquidity grab buy zone. Why? Because the oscillator's below. We're not taking those two buy longs. We're taking short, 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 short. So I'm going to show you in all these sell zones, instead of using a reversal confirmation yellow trigger entry like this, I'm going to show you another way to find out accumulation or distribution inside of the zone. Because now we got the trend correct, the bias, where we're either bias long or bias short. We got the zones. We know where the proprietary zones are at, where these liquidity grab zones are going to be possible reversals. Good morning, Leo. Now let's find out our entry technique. So let's look at our last short here. We got rolling. We got a nice little short rolling on the S&P. So let me blow this up. We got a nice short going on the S&P right now. We got our target. Our weekly targets are down there. I give you the targets before every Sunday. I'll change them this Sunday. So here is our sell. Let me show you what you can do. Let's say that you want to find out, and members, I will show you exactly how to do this after I get off of I'll show you exactly how to set your charts up after this video. I'll show you what chart I'm using right now. So let's take a look at this. This right here, this sell zone where price got up into, this liquidity grab sell zone, this zone is the same as the one right here that I just put up. So as price gets up into this sell zone at 7 o'clock this morning, 7 a.m. this morning, our oscillator went below at 7 a.m. our threshold, saying we need to short until it gets back above right here. Let me show you real quick. Make sure our mind's right. Our oscillator is below right there at 6:30. It's actually 6:30. It went below. It closed below the 50 at 6:30 a.m. this morning. See that body of the candle close, not the wicks. Wicks are for amateur traders. That's stop outs. 6:30. It went below the threshold right there. There's below our threshold. We're shorting only, right? Just like yesterday, we shorted all day. Day before, bought all day. No sells on the 18th and no buys on the 19th. So we got our mind right going into the trading day today already. We're shorting only, selling only. So it comes up to the sell zone. There's our threshold where it went below it. After 7, we want to short only. All trading sessions till we go above the threshold again. Short only. And this is all day. Short zones only. The market comes inside of right here. It gets inside right there. My little dashes are the zones. It gets inside of the zones right here. It's starting to get inside of it. How can we enter? Well, when I designed the software in the beginning, I want to see if these zones have confirmation that what? That the zones are getting rejected and we're getting a push outside the zones. And this was what's called a pull-in bar or a yellow trigger entry right there. How can we use another entry technique on getting a earlier entry? right? And where we place our stop. Let's take a look. Watch this. Remember 68.25. Okay, that's our fill plus or minus a few ticks. 68.25 or 68.5. So what I want to do now, and I'll show you all yesterday's examples too. I want to see price, obviously, when we have our oscillator went below below the threshold, sorry. Our red oscillator went below, so we're selling only. And here was our sell zone. Here's our first sell zone that plotted. It started to plot right there. At 7:52 this morning, it started plotting. It got inside our sell zone right here. Right there, inside of our sell zone. Let me show you. Right there, got inside of our sell zone. Got inside of our sell zone right here. That's exactly where this is right here. It got inside of our sell zone. What I want you to do is look for this. Number one, that sell zone has to hold. It cannot close a candle outside of a sell zone. If it closes the body of the candle outside the sell zone or a close, the sell is nullified. It gets inside of it. It starts cranking up. Crank, 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 crank. Gets up. That's the top of our threshold on the top of the zone. And we get a pulling candle right here. Why is this arrow a short? The short on this market right now was 71.5. What did it just tell you was the short on our other pull-in technique when I first created the software? 68.5. Right? It says 3 points you're getting in earlier from these zones. 3 points, which is 12 ticks. Let's take a look how. What I want to see happen on this entry chart, I want to see distribution when it's selling. I want you to look at these levels down here. And I'm going to go over this with you members, how you can put this on your own charts and how to set this up exactly how I have it set up after we shut this video off. We get inside of the sell zone. I want you to look at the accumulation that's happening inside the sell zone right here. Look at the threshold is 0. Look at the accumulation we got. You want to look for the first distribution below 0 as a entry technique, confirming that the zone is showing distribution inside of the liquidity grab sweep sell zone. This is the first close below. Your entry would be the next candle, which is 71.25, 71.5. The market has got as low as 51.25. Now, stop placement. So this is your entry. When there's distribution right there. First distribution, look for it. Stop level. Your stop level is always, the integrity of the stop is always the zone. We know that because the zone should reverse price. But what you can do is you can even do this. You can go a few candles back. I like going 2 candles back from the counting 1, 2 and putting on the third one. I like putting my stop right there. And I'll show you this, what size of candle this is. I mean, what side of chart this is and what chart this is, members, after this too. So now we got our stop in, our hard stop. We have our entry technique at 71.5, 71.25, and it got as low as 51. And the targets are market profile, which I just showed you, which I'll show you in a second. So that is how you can enter. We're looking for distribution on sells inside the zone, and we're looking for accumulation inside the zone. Let's take a look at yesterday's price action. This was last night at 6 p.m. Eastern Standard Time. This works 24 hours around the clock. I like trading the New York Open, but some traders like trading the Asian session. Some like trading the London session at 3 a.m. Works great then. and works great at the New York Open. Those are the three major sessions, right? So this is the Asian, and if you look, this is where our liquidity grab started, our buy started. So let me show you, because we were above, take a look. We were above here. We're above the buy zone, right? And let's take a look. Hold on one sec. On the above up to 50, 1 second, out, 1 second. Let me show you this real quick. Where are we at? Let me show you the buy zone. Just this is the buy zone example real quick, and I'll go back to sells because we sold all day yesterday. I want to show you because it was a buy. Let's take a look at this real quick. So right, this buy zone after the this buy zone came up after we opened up at 6 p.m. Eastern Standard Time. Remember, the market's closed from 6 p.m. to, or 5 p.m. to 6 p.m. Eastern. It opened back up at 6 p.m. So this is a buy. So I just want to show you a buy while we look at these sells. But there's our buy, right? So it comes down. So this level here, this is what a buy looks like since I just showed you a sell. This is our buy zone. Right there. This is the same buy zone as right here. Same buy zone. The market comes down to the buy zone and touches the buy zone. Look at the distribution that was going on at the time of the buy zone. The first accumulation was right here at 6:15 last night. The first accumulation. So you're going to wait for the first accumulation to close, and your entry is going to be right there. The entry was 76 3/4. It got as high as 93.5 last night in the Asian session. 76 3/4 entry. You can go a couple candles back. 1, 2. I like to put it right there. It'll be my stop. There's the entry. And it had a nice move. Let's look at yesterday's price action. Now let's look at all these guys right here. Let's take a look at all these sells that we had yesterday. All these shorts and how this would work. So we don't take buys. Remember, get these out of here because we're selling all day yesterday. Short, 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 short. So when we get inside these zones, let's look for distribution happening inside these zones to confirm we're going to get a roll. Let's take a look at it. Remember, we're looking for sells all day yesterday. Let's take a look. This is my zone that hit at, the zone started printing at 1:11 yesterday in the afternoon. Look at the accumulation coming into the zone. Lots of accumulation coming into the zone. The first distribution that came into the zone was below zero, was right there. So your entry would be the next candle, which would be right here at this level. So you're looking at a 59.5 short. It got as low as 47.5. How many minutes did it take to do that? We're looking at 1:16 in the afternoon to 1:21, 4 minutes. For that type of move. Let's go to the next one. This is where the zone started printing a red zone at 12:06 yesterday. Look at the accumulation right here. Lots of accumulation coming up inside the zone. It gets inside the sell zone right here. That's our sell zone. Where's the first distribution that happens inside of the sell zone? There's my first distribution at 12:25 right there. The entry candle will be the next one. The low is 74 1/4. It got as low as 52 3/4. Over 20-point move on the S&P. Where's your stop? Go 1, 2. I like placing it right above there on this specific Renko candle. I mean, this specific bar chart. There's your stop. There's your entry. Let's go to the next one that came in the sell zone. Our sell zone is right here. Our sell zone started printing at 11:51 yesterday. It comes inside of our sell zone. Accumulating like crazy. You want to wait for the first distribution inside the sell zone. You got it there. This is a smaller one, 67 down to 59. Almost 8 S&P points. You get the rhythm of this thing. Let's look at the next one. My sell zone came up yesterday at 1128 yesterday. These are my sell zones. Price needs to get at or inside of my sell zone because we're only shorting. My oscillator was below the threshold. So look at this accumulation that was going on inside of the threshold. The first close below the threshold was 1136. The second one would be the entry. Your stop is 1, 2, 3 candles back. Here's your stop. The market proceeds to go from 77.25 down to 59.25. Another one that was a big move out of the sell zone. What you're seeing is these sell zones are liquidity grab sweeps, guys. They're very important. Okay. I'm showing you a technique to get in 3 to 4 points faster than a Renko pull-in just by looking at the accumulation distribution inside of the zone. Another one. Here we come in. They printed right there at 1107, my sell zone. It got in the sell zone here, went right to the top of the zone. The first distribution came in there, and we're looking at 85.25 down to 73.25. Stop, 1, 2, 3. Never hits my stop threshold. Right there, count back, 1, 2, 3, top of the 3. Never hit the stop threshold. It went from 85.5 down to 73.25, another 10-point potential move. I think you're starting to get the point on this. Let's look at the next one. My sell zone came up at 1054.20, start printing. We get inside the sell zone right here at this level. It touches it. Is this the time to sell? No. There's still accumulation at the sell zone. Let's look for distribution inside of the sell zone. There's your distribution. The second one, your stop is 3 candles back total. 1, 2, 3. There's your stop. Where's the target? All the way down market profile target, 71.5. You can use my symmetry dots too if you want. If you guys have my symmetry dots, I love using symmetry dots on this. Our symmetry dots work really well with scaling on this. 71.25. Entry was 82.75. It went down to 71.75 potential. Another 10 points. You get my point inside these sell zones, right? So look, sell zone short, distribution. 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 Give you confirmation. Buy zone right at the close when that market opened back up at 6 p.m. Accumulation, buy zone. This morning, sell zone, right exactly in my sell zone. You can't make this stuff up, guys. Right into my sell zone. They are pulling the market back to grab liquidity. The market always tries to find fair value. They're looking for liquidity. I'm trying to make this as simple as possible by giving your bias for the entire trading day. And then the sell zones are right exactly at the sell zones. Look how stop right at my sell zone again right there. Get this off here. Let me blow these up. Get this off. Look at the last 2 trades this morning so far. Right? Right there it says what? We're only shorting. Look at my oscillator. My oscillator has been below the threshold since 6:30 this morning. Yesterday, when it broke at 5:30 in the morning, we were doing nothing but shorts on these examples I just showed you. No buys. No buys. Let the amateur traders get stopped out. Catch the falling knife. Keep buying Fibonacci's. Keep buying MAC crossovers. Keep doing moving average crossovers. Keep doing pivot levels because the market will run right through those levels, right through them. Do Elliott wave that counter trend trades the market. It'll run right through it. Divergence, run right through it. We're trading with the order flow of the market. Our oscillators below the threshold. We're looking for shorts all day yesterday. Today, it got below at 630. Guess what? Look at the market going down. We're below the 50. We're below, more importantly, our oscillator below. So what do? We're looking for shorts. Where's our sell zones? Very simply, the sell zone, there's 7 o'clock. Where's our first two sell zones? We're 2 for 2 today. 2 for 2. There's your sell zones. Right there. And how you can enter? You can use the accumulation distribution inside of that sell zone. Okay? Let's take a look at this one. We start printing at 8:42. Let's get this out of the way here. I'll put it on here for you. Let me work this one up. And I'll show you how to exactly set this up, guys. Trade what you see, not what you think. Trade what you see, not what you think. So 65 is our threshold. Mark this up. Let me show you the entry technique on this last one too. So here's our first sell zone. Came inside of it. The first distribution came in at 830.16. Market just gets crushed from 71.5 down to 50.75. Market comes back up. Look at all this accumulation. Comes back up. Let me find the top of the zone for you so you get a good picture. The top of the zone was 73.25. So there's your sell zone. All right, there's your sell zone. We get up to the sell zone. Look at the accumulation up to the sell zone, though. Accumulation. Where's your first distribution candle? Right there. There's your second one. So right there, what we want to do, we want to look for a short opportunity at that level. In this last one, the entry was at the low of the candle, 57. It's been as low as 47.5. Almost another 10 points. Where's my stop? My stop, 3 candles back from this level. 1, 2, 3. There's my stop. So those are our 2 trades today so far. This one, entry, 71.25, been as low as 51.25, right? 51, 61, 71, 20 S&P points potential. And this one was 57 down to 47.5, just under 10 points. Just on 2 trades. That's the potential we have with the software. Knowing your bias to short, and secondly, you know your entry with this. So members, I'm going to show you how to set this up on your own charts. I'm going to put it down here for the trading day also. I'll just leave it down here for you so you can watch it live also. Now, where's our targets on these, guys? I have our targets that are preset. Every Sunday night, I put them in the chat room. Those are pre-market targets. And then we have market profile. Market profile is always our target from the previous market profiles. So you want to mark up previous market profile. You go back 3-4 days and say, hey, where's my profiles? Where are they trying to find the next fair value? Well, here it is. Here's a control point. It doesn't take the smartest bear in the woods to realize the market likes to go from control point to control point, because that's the most volume that's traded in market profile. It's worked since 1985, for God's sakes. They like to take it from control point to control point because that's where the most volume, that's where they're trying to find the next fair value. So it's safe to say that our target on this short is going to be where? The control point. Where's that? 36 3/4. Where's the next one? 13 3/4. That's why we use market profile. We use market profile for targets to see if we're imbalanced for these shorts. We're in an imbalanced shorting market. We got our oscillator pointing south. We got our market profile pointing south. And we have our target sitting right below us. We do have our price profile to scale on this last short right at 49.33. 49.33 is a scale right there. So that's a scale point to scale contracts because you're on these dots. These dots are price profile. You break this, guess what it opens the floodgates to? All the way down to my weekly target, 68.15. All right? Pretty cool stuff. So let's take a look at this then. We have a complete trading plan. Why? Chart one, the chart one you look at. Am I a net buyer or net seller? Are they trying to sell liquidity or buy liquidity? I'm a net seller. My oscillator got below at 630. In a half of a second right there, you know exactly your bias. You know you're shorting or you're buying. That's it. Half of a second right there. I'm shorting. Yesterday, we're shorting only sell zones. Day before, only buy zones. So that oscillator tells us right away. That's one piece of the puzzle. That's the first thing you do. The second thing you do, you don't look at your entry chart the second thing, right? You look at your zones. Where's my sell zones? Where's my buy zones? I know I want to look for shorts, right? I'm short right now. I'm looking for short bias. Look at my chart over here. Where's my sell zones? Sell zones are sitting right here. My proprietary dash is right there. Right there's a sell zone, sell zone. Why did the market reverse inside the sell zones? Because what the market likes to do, the smart money likes to bring the market up, sweep stops out from this. Watch this. These are liquidity grab sweeps. Do you think that traders have their stops above here? Yes. You think traders have their stops above here on this swing point? Yes. So what they're going to try to do, they're going to try to sweep. It's called a liquidity grab sweep. They're going to try to sweep the market back up against trend and stop these traders out to grab what? To do a liquidity grab sweep. It's a liquidity grab. They're sweeping stops out to gather contracts to take this southbound on the Greyhound. We already know we have a short bias. Why did they stop it right at my sell zone again? They're bringing it back up, taking all these stops right here, all these players that got short right there, all these players that got short right there, the amateur traders, and they're sweeping it back up at the sell zone, sweeping liquidity to bring it lower. Right? So that's what we want to do. You want to look for these liquidity grab zones. What's the next zone? The best spot to look for another setup? Here. It's the zone. All right, that's where you're looking for a possible reversal. Okay? That's what we're trying to do. Now this is a momentum play. Now you can see what the oscillator is doing right now. This is a momentum play going on here. This is a momentum play. Momentum. We're not in the sell zone. This is a momentum play. If you want not to look at, you don't have to take yellow trigger entries outside of the zone. You can wait till it gets inside of the zone. You can wait till it gets inside of the zone and then look for what? You can look for distribution after you get inside the zone. You can look for distribution after you get inside the zone. All right? You can look for accumulation at the zone. You can look for distribution inside the zone. Distribution down here inside the zone. Distribution selling inside the zone. Distribution inside the zone or at the zone. What it does, it gives you a complete trading plan. Now you're not saying, hey, I'm going to take every single yellow trigger. I'm going to take every single move in the market. No, just wait for the market to push against trend, against our oscillator inside the zone and wait for the first, if you're shorting, first distribution that you see to fire in with your hard stop. Like I showed you in this video.